Crypto Hotep here with another investing video. We are on week 82 of the family portfolio and dividends tracker. Really appreciate you guys listening, taking time out, watching the video, and also subscribing and commenting. I really appreciate it. It helps out the channel, helps out the algorithm, and I I can't kind of express enough what it means to get the views and the support. With that being said, guys, I always like to mention that none of these videos are financial advice. Please do your own due diligence when researching stocks, crypto, any type of investment. Just because me and my family are investing in it doesn't mean you should. Different risk tolerance levels apply and all of that. So consult with a professional. If you're unfamiliar with these videos, go to the channel, go to week number 1, where I talk about my whole methodology, why I'm doing this, and basically in a nutshell, you're just following along the financial investing journey with me and my family. But yeah, check out week number 1. It'll break everything down for you. As I've said before, I want to keep these introductions short and sweet, and we can get right into the good stuff here. Before we go to week 82, let's talk about the markets. The markets were pretty quiet in terms of news. The markets did dip this week though, but they were very quiet. Wasn't a lot of news, wasn't a lot of pressers, nothing really too major, but some of the things that did pop up, the stock market is back in extreme fear right now. The Kobesi letter, which is a very good account. I've said this before on these videos. This is a very good account for up-to-date news and information related to finances and stock market, crypto, those type of things. But on November 5th, they tweeted out the stock market is back to extreme fear. It said, once again, this is not what you see before a crash, with the S&P 500 2% away from all-time highs. That's pretty much true. Typically, whether it be crypto or stocks, because crypto does have a fear and greed index as well, typically you see a crash when it's extreme greed. And the reason or the thought process behind that is when it's extreme greed, that means everybody wants to get in. Everybody wants to throw money at any stock that they can or any crypto that they can, and they just want to make money. Usually extreme fear is the total opposite. People are hoarding cash, people don't know what the market's going to do, and people aren't jumping in, right? So you normally don't see a crash with that, because normally the crash, if it's in extreme fear, then the crash has already happened, right? So it doesn't happen even further with extreme fear. Normally that is like the bottom, if you will. So another thing that another good account, Watcher Guru, tweeted out on November 5th, ironically, is President Trump says that the stock market will hit many more record highs. I would take note of this, right? Trump has said several things about the stock market this year, and he has bet 1,000 with those statements. He has told people to buy stocks, or it would be a very good idea to buy stocks, or whatever he said. I'm paraphrasing, but he said it. And after both of those statements regarding the stock market, S&P 500 went to record all-time highs and has been at all-time highs ever since. So he's again said something here, so I would definitely take note of this, right? With that being said, guys, before we go to week 82, we also look at week 81, just as a quick review. So week 81 here, it showed that we had an account balance of 3507.34 that has a money weighted rate of return of 17.5%, dividends earned of $24.53, and market gain of $387.02. So this week 82 has us with a balance below that. So our balance went down with $3,461.17, money weighted rate return year to date of 14.60%, dividends earned of $25.89, and then market gain of $320.50. So what actually happened? What actually happened between this week, or last week, and this week? So again, it's been very quiet. The only thing that's happened, the event that's happened, is November 5th. There was a dividend payment of the Lowe's company, which is Lowe's, of 25 cents, and that went to my account or my portfolio that holds lows. Now, if this is your first time watching a video and you're probably scoffing at 25 cents, like Crypto Hotep, are you serious? A quarter? Like, I know we're not celebrating a quarter. Well, I am. I'll celebrate the quarter. I'll celebrate any free money that I can get here only because I know where we've come from. And this is what I mean. So, here, why don't we do this? We'll look at lows and we'll look at the dividends that we've received over time. Okay. So the dividend payments have been small. They've been pennies. They finally increased in 2025 from 3 cents to 4 cents to 5 cents, and now it's ballooned up to 25 cents. So yeah, it is low. It, it's like a blip on the radar here, but I know how far we've come with building this position, and it's motivation for me to keep building the position in lows so I can keep getting those payments out. Okay. So in addition to that, we had our bi-weekly deposit. So we had weekly deposit $20. We have 5 buys. We bought Visa, Target, Starbucks, Microsoft, and Costco here. Okay. M1 Finance does a great job because you can buy fractional shares with very little money, so you can, at least do something in the markets. We also had a buy on November 7th. One buy, $1.75 of Waste Management. Okay. And with our portfolios, we always go bottom to top. At the bottom is our middle, but it is looking pretty good for our middle. So our middle balance is $449.89, money weighted rate of return of 10.57%, market gain of $26.74, and the dividends earned of $2.74. So our middles stocks have increased in the double digits now year to date. And that is a good thing because we've been low on our middle stocks this whole year. It's kind of been in the red. It's been single digit growth, not very much. And that's primarily because of Target. So Target is still the Achilles heel here, I should say, with their portfolio. But we're closing that window down with Target. I mean, several months ago, if you look at the tape, quote unquote, if you look at the past videos, Target, we were down about 30%, 35%. It's been pretty bad with Target this year. Starbucks, same thing. We're down like 10, 15% Starbucks. But Sony's still doing well. Tesla still almost above 30% here. And then Google, nobody's stopping Google, up almost 95% year to date. And then Amazon, which I've said was a cheap buy several months ago. I said this very easily that Amazon was an easy buy here, and it's starting to turn green. So watch out for our middles portfolio here. Let's go to my wife's stocks. My wife has a balance of $471.63, 41.37% year to date. And you'll see, like, my wife did hit over 500, but that was at the end of October. And then once early November came in and the market saw a little dip, the dip also occurred in that balance and brought her under 500 again. But all good because market gains still $93.82. Dividends earned of $2.42. And on top of that, we have a new addition to my wife's portfolio. So my wife decided to add Microsoft. We were talking and she just mentioned, hey, I think I want to add Microsoft to my stocks here. Very easy again to do it with M1 Finance. I just changed my allocation targets right here. And then we started buying Microsoft. That was part of that Microsoft purchase we saw earlier in the activity. Only $4.10, but we're going to be building this position up. So I'm mulling over if we should just rebalance. But I'm still thinking on that, so more to come. But again, a list of great stocks here. Tesla up over 40%, Google up over 85%, and then Celsius is at a dip though. So another reason why my wife's portfolio dipped below 500, Celsius was at a $60 per share price point. It did dip. It dipped down to $41.52, but I did predict that as well. I did think it would. It wasn't clearing $60, which is fine. There's nothing bad about Celsius still. I think it's still a good stock. So no need to worry there. Let's go to our youngest. Our youngest has a balance of $494.17. Money weighted rate of return of 17.31%. Dividends earned of $1.69 and market gain of 51.26. Very similar, or similarly, I should say, towards the end of October, cracked that $500 mark, and then slowly, with the market dip, so did the balance. But nothing really sticks out with our youngest. Starbucks is down, but again, we're closing that gap. Closing that gap on Starbucks. Costco up less than 1%. Apple up over 21%. Can't ask for more from Apple. Tesla up over 27%. And then Sony, again, being the anchor, up over 28%. Next, let's look at my stocks. My stocks, they dipped as well. So $1,019.64 is my balance, with a 12.79% year-to-date return. Market gain of 82.36 and dividends earned of $13.98. So again, technology is the anchor here for mine. Finance has been down. Finance consists of Moody's and Visa. Two dividend growers that I'm not giving up anytime soon. So I'm just riding it out with them. Real estate is O Realty Company, or Realty Income, I should say. So not really worried about O. O is still going to do what it does, and I'm going to collect those dividends from them. Industrials and energy is another one. Waste management and Cintas, we did buy some of that waste management, so those are down as well. But again, these are very quality companies, not and ones that you don't have to be very concerned on. AbbVie is all good, up over 27% on AbbVie. That's my pharmaceutical. Restaurants and food up over almost 4%. And then consumer staples, which is Costco and Lowe's. We had that Lowe's dividend payment earlier. And then Costco here. Again, quality companies. Costco, I'm never worried about Costco by any means. Never, ever worried about Costco. Okay. And so my portfolio looking good. It just dipped a little bit because of the markets here, but again, volatility is usually your friend. Let's go to our oldest, last but not least, who has a balance of $1,025.84. Money weighted rate of return year to date of 8.93%, and then market gain $66.32 with dividends earned of $5.06. Great dividends here. Apple up over 15% on Apple. We spoke about Costco. McDonald's up over 4.5% on McDonald's, and Tesla. We know what Tesla's doing here. Very simple, very easy portfolio. It's been that way since we started these videos with our oldest. It has just been working. So with that being said, guys, we will close out for week 82. Sauce with a balance of $3,461.17. A money weighted rate of return year to date of 14.6%. Dividends earned of $25.89, and a market gain of $320.50. If these videos were helpful at all, feel free to like, subscribe, comment. Let me know what you think, guys. Reshare. Let me know what you're investing in. And as always, thank you and happy investing, guys.